How's it going, Option Sharks? This is your option coach here, and today, as you can see, I'm on my terrace. Take a look at the Pacific coast. Okay, so let's dive right into it. So in this video, this is a part 2 of the previous video that I created. And this video, we're gonna cover about the catalyst for Robinhood and why I am all in on Robinhood, ticker symbol HOOD. Okay, so the first catalyst is September 7th. Robinhood is going to have an event in Las Vegas, and this is where they're going to announce more news, forward guidance, and projects that they're working on in the near future and upcoming next couple months. And then the second catalyst will be the S&P 500, right? So Robinhood has been selected to be inducted into the S&P 500. They were inducted last, I believe, about a month ago or 2 months ago, but they didn't make the cut. But that's still in the horizon. And obviously, when that happens, that's also going to drive the stock price up. Why? Because once they are officially in the S&P 500, every single S&P 500 ETF, people that invest in the ETFs are going to have a piece of Robinhood, which also will drive the stock up. So based off what the stock is trading at, today is a Friday. This is the Jackson Hole meeting that Chairman Powell has delivered his thesis around, and the stock's trading around 109, 110 strike. All right, so the way I look at it, Robinhood under 110 is a buy, is a complete buy. No down, no brainer. If you could load, obviously if you get a better price at 105 and below, that's the way to go. But I would say 110 and below is where you want to load the boat, right? And the reason, and I'm personally all in on this stock, over $250,000 in the Robinhood. Okay, so catalyst number 1, the event is in Vegas, September 7th. Catalyst number 2, S&P 500. And I'll say we can say a catalyst number 3 is if we do get a rate cut, the stock will also benefit from that as well. Okay, so this is my thoughts, and if you agree with me or you don't, you can leave a comment. I will respond. I'd like to check out and see what you guys are seeing out there and what you're thinking about. And of course, if you are in the markets, you're new to the markets, and you want to generate income trading options, we can help with that. We provide one-on-one coaching, help you with generating safe and consistent and semi-passive income anywhere between 3 to 10%. And of course, in the second half of this video, you'll see me in action coaching one of my Option Shark members on how I help them generate income. All right, so other than that, if you want to see how we work, you can book a time. It's in the description, and also in the comment, there's a link there to my calendar. You'll personally speak with me, and we'll see if we're a good fit. I'll give you a virtual tour. I'll show you exactly how we work. All right, other than that, I wish you a fantastic day wherever you are, and I'll see you on the next one. So here we are with Mr. Rick, and we are going to make some trades. He's starting out as a blank slate. We're going to be working with 250K capital, and and we'll go from there. And also, Rick, you tell me, because this is your first time, how much of that capital you are comfortable using for your first time, or are you comfortable doing it all? Again, it's up to you.
I want to do it all, but I think we're going to start off with 50 grand.
50 grand. Okay.
Yeah.
So we'll be like a little bit up or below that, right? So about 5 to 6 contracts, right? Because the stock we're going to trade on, the strike price is around 95.
You're talking about trading weekly or monthly?
Weekly.
Okay.
Generating.
I noticed it on that video you sent that you wanted me to watch. They were talking about how he only trades on monthly just because it's, I'm sure you remember his explanation.
It's an old video. Yeah.
But I'm going to follow your guidance.
Yeah. So. Monthly is back then when the market, now things change every week. The administration that we have, it's constantly evolving really quick. Okay,
and I want to be more involved and stay on top. If you're only doing it once a month, that's
no, you're not really you want to learn this. Exactly. Doing this, learn the mechanics of this, and you will thank yourself later. Exactly. Okay, so let's go to options, and then type in the ticker symbol HOOD. D. HOOD. D as in David. Great. Yeah, and we're going to change the strategy to options. Oh, change the strategy to the right to options. Yep. Just click on put.
I'll put.
Perfect. Okay. All right. So what we're going to do is the wheel strategy. We're going to do this cash secured put side to build a position to get in on this position. All right. And we're going to do it on Robinhood because Robinhood is super. This company is making all the right moves. They're innovating. They're partnering. They're expanding their total addressable market over in Europe, in the UK. And also they're tapped into the crypto industry. They have literally tokenized the US stock market, giving access to all Europeans and all the people in the UK access to the US market through tokens. What do I mean by that? I mean that they can invest in Apple stock with euros and through tokens without having to buy the Apple stock directly. So they can get the same exposure to any stock through tokens, and it runs in parallel to the stock price. So it's very, very that's just unbelievable. That just opens the floodgates to everything. And on top of that, they also offer crypto. Okay, so action will be sell to open. And we're going to be very aggressive with this because I already seen how it's trading. It's very safe. We're going to pick expiration next week, though. No, not 100 quantity. So leave that for now. Leave that blank. And then just go to the expiration where it says 7/18/2025. We want to select 7/25/2025.
7/25/25.
Yeah, so up top, I want to pick not this expiration, but the following week. And then we're going to go with a, let me look at the premiums for the strikes real quick. But more likely we can check a 97 strike. So for the strike, look for a 97. And I'm going to just double check on my side, which is faster, to see what all numbers look like. And the premium should be quite juicy. So let me see, July 25th. And 97, yeah, it's $170 per contract. But we don't even need to be that greedy, okay? We can just be very range bound. Do a 94 strike. And 94, there's resistance, there's support there. Okay, perfect.
So what this means is right now the stock is trading at $103.
Yes.
And we're saying that if it goes down to 94, we'll buy 100 shares?
On the day of expiration.
Okay.
On the day of expiration, after the bell closes, if the stock's trading 94 and below, you'll get to sign the shares at 94.
But that's what we want. We want
but it's a good thing. It's a good thing.
And you're gonna
either you get a sign or don't get a sign, it doesn't matter. Robinhood is going one direction. It's holding steady and stable at a certain support level. And it's actually the support level at 99, but we're gonna go even safer and go 94 for your first trade just to see how this goes. Right. So you're gonna collect $100 per contract. Now, when you select a $94 strike, so let's do some coaching. So one option contract is how many shares?
100.
Correct. So if we select a 94 strike, then what is the collateral needed to open one option contract for Robinhood?
9,400.
You got it. So then if our buying power is 250K and you only want to deploy 50K, then we just take the 50K divided by 9,400 and I'll tell you how many contracts you can execute.
Right.
So more than likely it's going to be like 5, right? So we're just going to do a quick math, just double check. Yeah, this is my 5 contracts. So you can just type in quantity 5.
Okay. So that's for contracts. Okay, got it.
Yeah. There you go. You'll make $500 here.
Okay.
$500. Yeah. Okay. Obviously, if you deploy your capital more, you'll make a lot more. Okay, we're talking about 1,500 and beyond. Okay, but to start off, let's just do with this. And then you go to the limit price, okay? Whereas the limit price is 1.00. Go down and click on that. And they should open a, what do you call it, a choice. No, limit, we leave that. But the limit price, actually just click on the mid. Go to the, you see how there's bid, mid, and ask on the right side? On the right side. Yeah, it's in blue, bold letters. Yeah, just click on the mid. Click on the mid. Tap on the 106.
Okay, 106 mid.
Yeah, that'll populate in your window. There we go. Okay. And then we're going to go 105, just one down below to get filled.
Okay.
Yeah, okay, so you can click 5K. Yeah. So we don't want to get too greedy, but we also want to get filled. So let's process. Actually, no, go up. The numbers change. Yeah, click on 106. Yeah, let's process this real quick. Review order.
Now it's not 105.
It's okay for now. It's going to move. Let's just process it. And then I'm going to show you how to read the contract. Let's review this and see if we get filled. Go ahead, hit review order. Okay. And then, process this. So this is going to use about 50K of collateral to open this trade. Okay. Now you have done the trade. Let's click on order status to see if it got filled. You always want to check order status to see if, so you see it says filled.
Nice. Okay.
Yeah. So that means, you just made $530 there. So congratulations. Okay. All right. Let's go up.
Okay.
All the way up to the top screen. Click on accounts on the left. Yeah. And then go to positions on the left. Same thing, accounts and then positions. On the top left. No, all the way up. Click on accounts next to trade.
Accounts.
Yeah. Then this opens a window and then click on positions. Go down. Right there. Up. No, to the left. No, left.
There you go. Jeez. Okay.
There you go. Okay. Go down. Okay. So there you go. You see the trade there. Okay, I'm going to share with you how to read these numbers, what all these numbers mean, and how everything reflects line by line. Sounds good?
Yeah.
Yeah. You don't need to go too far to the right, only to the left. Just the left side is important. So scroll the bottom bar back to the left again.
That's just the name.
Right. Okay. So no, just go to the left. Yeah. The contract is the second. You see where it says hood, and then there's also hood 7. The expiration date 7/25/2025.
Yep.
That one is the contract itself. Okay. Let me request control so you know what to look for. I'm going to just request control to say yes to this, and then I'll show you what to look at. Okay. All right, so let me know when you can see the mouse.
I can see it.
Okay, so this is the most important line, right? Hood, this is the ticker symbol. So let's say if you buy shares, then in this line here, there will be the number of shares you own. In this case, we're not buying shares. We're just selling puts to gain entry or selling puts to get premium. All right, so in this line, this is the contract itself. This is the trade itself. If I click on this little sandwich thing here, okay, and this will give you a menu of choices you can do to manage the position. Okay, obviously, we don't need to manage it because we just opened it. And then the trade itself is here. The most important thing is the cost basis, the market value, and then the quantity. Okay, so cost basis, what does that mean? That means the premium that you collected, right? So you collected $526.69. Okay, and then over here is the market value. Okay, the market value is what the value of these contracts are worth at this current moment. At this very moment, they are worth. Once you open it, it's either gonna most of the time it's gonna be worth more than what you paid for. So that means you being in the red. In the red meaning, if you take 537.50 minus 526.69. and you'll be out of pocket $10.81 if you were to close these contracts today. Obviously, we're not going to do that because we need time decay to happen. We need to let these contracts get closer to expiration date, and that's when the contracts deteriorate in value. They deteriorate time decay.
That negative $10.81. That's including the $500 premium, right?
That's
so I'd lose that as
Yeah,
well.
yeah. If you wanted to close this contract at this very moment, you want to close out these 5 contracts, you'll have to pay $537.50. You already collected $526.69. So if you pay $537.50 and you collected $526, then you're out of pocket $10.
Crystal clear.
Yeah, but the reason why it's out of pocket $10 is because you just open these contracts now, and we need theta. So theta is time decay, and we need to let the time decay these contracts. Okay. Right. So what happens is in our next coaching call, you're going to see these numbers completely change. These numbers are constantly evolving as time moves on, and as the stock also moves up and down in the market. Okay. And then here is the current value of these contracts. The value of it is 1.13. Right. So anytime you see the decimal here, you just move it to the right 2 times. So that just means that these contracts are worth at this very moment $113 per contract. Okay. And then you sold the contracts for, I think, 1.06. Okay. So that's why $106 per contract. So then if you take 113 minus 106, that difference of that times 5, that tells you the difference of the 1081 here.
Right.
Okay. Anytime you see a minus sign in front, it means you sold contracts. Okay. If you see a plus sign, it means you bought contracts. Primarily, we're going to be selling. We're not going to be buying anything. Okay. Only time we buy is we buy a leap when an opportunity presents itself. Okay.
Hence the wheel, right? Hence the wheel. It's going in a circle. You're selling puts to gain the stock that you find attractive, that you believe you can get at a discount, and then you're selling calls to make a profit off of those shares. Yeah. If
you get assigned. Okay. Right. So in this case, the likelihood of getting assigned is very, very, very low. Like I just picked a very 94 strike price just so you to see how this goes. 94 is for Robinhood it's like free money, literally. All right.
But if I get assigned, I'm getting a smoking deal because it's way discounted.
100%. 100%. And there's another big price movement that's going to happen because Robinhood got selected to be inducted into the S&P 500.
So the downside of this is that, I mean, worst case scenario, I mean, I can get stuck with the funds but I mean, I can still sell the calls, but I get stuck with the stock.
Yeah, worst case is the worst case. I can tell you worst case is you get assigned a position and stuff just tanks.
Right.
Now, that will be a very black swan thing because it'll have to be like something happened to the CEO or something like weird, crazy happened, and then the stock has in a situation. But that can happen to anybody. It can happen to
anybody. But if you're holding long term, it's not that big of a deal.
Long term, no.
You can still sell calls on it and have
generate income from it.
Yeah.
And I have a better way than that. Even if it goes in the money in your strike, rather than getting assigned to shares, sell the puts, sell in the money puts. That strategy is much better because you get paid even more. Rather than getting assigned to shares and sell cover calls, you sell puts in the money and nothing fundamentally changes. All you do is move in a timeout and getting paid at the same time. That is like unbelievable. That's like when I figured that out, that's just a huge game changer for.
So the risk seems really low. The risk seems really low here because if I do get assigned, it's going to be at a low price, and I mean, and I'm generating an income off that premium until the 25th. So that's pretty cool.
Yeah, stock selection. Well, you get the premium right away. AMD is great. I have a leap on AMD. But I bought the leap last year. I'm up. Finally, it's actually paying off. My leap up 6,000 now. But 6,000 now to wait 1 year is not good, right? Because I'm trading spreads and doing other things. I'm making,
right.
I mean, I'm making a lot more in a week. The week I'm doing, and this week I'm already up. Let's see, 16,435. Okay, to be exact. Okay, but again, we're gonna just focus things one step at a time so you see how everything goes.
Right.
But yeah, so this is how you read contracts. The cost basis is the premium that you collected. Okay, always remember the cost basis. That's what you got paid. Market value is what these contracts are worth at this very moment, and then the exact decimal, the exact number of what these contracts are worth is 1.13, which translates to 113. And then how many contracts did we do? We do 5 minus 5. We sold 5, and expiration dates it shows on the left 7/25. Okay, so if you see, I just gave you a little quiz. Let's say the price right now it shows 0.50. Then what does that translate into dollars? Like what is 0.50 equivalent to?
You moved the decimal, right?
Yeah.
So, like $500
and
5,000.
Well, it just means $50.
$50. Okay.
Yeah. So 0.50 just translates to $50.
Oh, you found your price, right?
Yeah, I'm just telling you what the price is.
Right. Okay. Yeah.
So anytime you see these decimals, just move the number to the right twice. If you see 0.10, it means $10. If you see 0.01, it means $1.
Okay.
Okay. So that's how you look at it. Just looking at the decimals as dollar figures by moving the decimal to the right twice.
Right.
Okay. Okay. So that's it. That's your short and simple. Your first trade. Share with me, like, does it make sense? Is it sinking in? How to look at the numbers, and then also the mechanics of what we just did, selling the put, select the expiration date, the number of contracts, and the strike that we pick, and so forth.
Yeah, no, it makes sense. I'm glad you got on video so I can review it again, which I definitely will. I think I'll absorb even more or catch something that I might have missed. But no, it's pretty crystal clear. Makes sense. I want to do more.
I know. I would recommend you do more because you want to take advantage. Opportunities come and go in life, and you need to capitalize.
You said you did a leap option on AMD. You wouldn't recommend this kind of trading for AMD?
No. Hood, you can do a leap on Hood, but the thing is, it's much better to do a leap. The thing is, though, Hood is so bullish that you can even do a leap now. But generally, when you do leaps, is when you do it when there's a pullback, a correction, a stock that you're bullish on, and the market has a pullback and a correction. That's when you jump in and you buy a leap. All right, it's a long call. A leap is a long call, it's a long-term play. and you buy it, you pay a debit, you pay a fixed amount, you're out of pocket for that amount, no matter what, and you need to wait a certain amount of time to be in profit. So I think